All right, today we are diving into one of the weirdest earnings reports of the season, BitFuFu. On paper, it was an absolute monster of a quarter, but in the market, total breakdown. So we're going to figure out exactly what happened and why.
Okay, this is it. This is the big question we're tackling today. How does a company deliver a quarter that just completely smashes expectations on every single metric, and yet the stock tanks? It saw this huge intraday reversal, closed down over 8%. It makes no sense on the surface, so let's unpack these numbers and solve this puzzle.
First up, let's just look at the headline results. And seriously, if you just read the press release and nothing else, you would have thought the stock was going to the moon. The numbers were just that good.
So let's start at the top line. Revenue came in at over $180 million. Now, that's not just 100% growth year over year, it's a massive beat. They crushed what analysts were expecting by more than $45 million. I mean, that kind of surprise usually points to some serious momentum. And that strength, it went straight down to the bottom line. Their non-GAAP earnings per share, that's the profit metric that strips out some of the one-off accounting stuff, it came in at 6 cents. That's double what the street thought they'd do. So this wasn't just empty revenue, it was profitable growth.
And this number right here, this really shows you the kind of leverage they're getting in the business. Their adjusted EBITDA quadrupled, 4x'd year over year, to over $22 million. So on paper, you've got a company that looks like it's absolutely firing on all cylinders. So to understand why the market wasn't buying it, we got to dig a little deeper.
To really figure this out, we need to get inside the engine room. BitFuFu runs what they call a dual engine model, and you really have to understand their revenue mix to get both the bull case and, well, the bear case.
Yeah, this is not your typical Bitcoin miner. You can see right here the huge majority of their revenue, a whopping 68%, comes from their cloud mining business. That's all recurring service fees. Their own mining, the part that's actually tied to the price of Bitcoin, that's only 11% of the whole pie. Now, this unique mix is supposed to be their big advantage, but it's also where the questions start to pop up.
And here's exactly where the story gets tricky. On one hand, you have the good stuff, their first ever GAAP profitable quarter, which is huge. Unbelievable 119% net dollar retention in their core cloud business and really strong user growth. But then you look at the other side. Look at how high that cost of revenue is. That leaves them with razor-thin margins. Their own Bitcoin production actually went down. And then there's this $150 million at-the-market program hanging over the stock. That basically means they can print and sell new shares whenever they want, which could seriously water down the value for everyone already holding the bag.
Now, despite all those concerns, their core operational numbers are still looking really solid. I mean, you look across the board, mining capacity, cloud users, the amount of Bitcoin they're holding, it's all up, and up big year over year. So the business itself, the machine, it's definitely growing. No doubt about it.
Okay, so you've got this mixed bag of fundamentals, right? Mostly positive, but with some real question marks. So how did management spin the story on their earnings call? Well, they looked right past the quarter and focused everyone on the future.
The CEO, Leo Liu, used this exact phrase, a clear inflection point. The message they wanted to send was obvious. Hey, this is the moment. This is when we proved our model works, that it can be profitable, and now we're entering a whole new phase of growth.
So they laid out a bunch of these future growth drivers. They're talking about tokenizing real-world assets, getting cheaper power from natural gas, expanding in the Middle East. They even hinted at getting into AI. But, and this is a big but, check out that last bullet point. No live Q&A. They just read their prepared remarks and that was it. For a lot of investors, that's a massive red flag. When you don't take questions, it makes people wonder what you're trying to hide.
Which brings us right back to the market's bizarre reaction. You have the strong numbers, you have this ambitious vision for the future, so let's connect that to what the stock actually did on earnings day.
I mean, this timeline says it all, doesn't it? The results drop, the stock absolutely rips higher, up 12% in the pre-market. Looks like a great day. But then through the trading session, all that excitement just completely fizzled out, leading to this jaw-dropping 17% reversal from the high to the close. Just why?
And boom, here it is. This is probably the most important slide in the whole deck. Look at that gap. While the rest of the Bitcoin mining sector is up over 125% this year, FuFu is down 41%. It has been a terrible underperformer compared to its peers, and that tells you everything. It tells you that investors are just deeply skeptical, and one good quarter wasn't nearly enough to change their minds. A lot of people probably saw that pre-market pop and said, finally, an exit.
So, let's put it all together. What's our final take on BitFuFu? What are we expecting for the next quarter and beyond? What's our call?
Our thesis is simple. BitFuFu is officially a show-me story. The growth in their cloud business is real, it's impressive, you can't deny it, but it's being completely drowned out by the stock's ugly history and those very real fears about dilution. The market is done listening to promises. It needs to see them actually deliver on one of these new projects.
So based on all that, we're initiating coverage with a market reform rating. Our price target is $350, which, you'll notice, is right about where the stock peaked on earnings day. Our outlook for the next quarter is cautious. We think the results will probably be fine, but we just don't see a big enough catalyst on the horizon to really change the negative story around the stock. Not yet, anyway.
So if we wanted a way to trade this thesis, we'd pitch something called an underperformer pairs trade. That's pretty straightforward. You go long the WGMI miners ETF to bet on the whole sector, which is strong, and at the same time you short FUFO stock, betting that its company-specific problems will make it keep lagging. And what's the catalyst to get out? You'd close the trade if, and when, management finally delivers a concrete deal on one of those big catalysts they've been talking about. That's the kind of thing that could finally change the narrative.
And as always, this is not financial advice.